Couple of housekeeping points before we dive in. So first off, I just want to really thank everyone again for submitting their thoughtful survey responses recently. Really, really useful and will help shape our show even more. As promised, we'll be raffling a couple allow lists for those who filled the survey. And Poop will actually be announcing that, I think, a little bit later in the show. So hang tight there, and hopefully the winners are live, although they may not be as well. We're officially on Apple, Spotify, and Google Podcasts now. So catch all the episodes you've missed and string them together, of course, for a holistic picture. Do continue to want feedback or thoughts. So if you have any thoughts regarding numbers therapy or feedback, please continue to just share them. We're just trying to get better and make sure this is just increasingly valuable for everyone. And then lastly, application to be a guest on Numbers Therapy is out there. We're providing allow lists to both the guest and the referrer if the guest you nominate becomes a guest of the show. So if you don't know where that is, please reach out to Poop or myself and we can direct you there too. So for framing purposes, purpose of Numbers Therapy, of course, is to talk through the macro and oftentimes showcase our in-house MVHQ experts, today being one of those days. However, new news, this is likely evolving as we start to bring in outside experts as well. So we get increasingly good thought. And, that alone is a result of the kind of survey responses we've gotten and requests people have had. So appreciate it. So not only is our content improving, but the live shows will, of course, remain MVHQ only and gated, as well as the feedback loops and the product changes. For our audience, the goals are the same: ensure everyone understands how all the big pieces fit together, help everyone make better decisions with NFTs and other investments using a balanced perspective, learn about different areas and opportunities that exist out there as well, and different ways of thinking, and when possible, even showcase some of our people in here and get their background and perspectives. Also, I always say as a reminder, as you know, there are different levels in here, listening both live and then, later listening on the recorded side. It's important everyone's along for the full ride. So if you have any questions and you're in the live crowd now, regarding an acronym or a term, just please make sure to drop it into guest questions and I'll make sure to scoop you up along the way so that you have that answered. You're probably not the only one with a question as well. So there's no dumb questions. Everyone has different backgrounds. Please make sure to drop it in there. And then one important note and disclaimer: none of what you hear in here is financial advice. It's all opinions. So without further ado, and on to today's guest and episode. Today's guest has been known to juggle. He's a true entrepreneur and hustler, which always makes me happy for sure. He's successfully taken some of his background in both flipping and collectibles and parlayed it into making NFT investing and trading and art. For those that know him, and that's many, he's got a particularly good knack for where to spend time and money, and that will actually be the focus of our conversation today. I've had the pleasure of working with him a bit on a couple projects that he'll hopefully be able to talk about, and I always enjoy seeing him in NYC as well, and I'll personally make sure he gets up to LA in a few months also, since he's literally just a short car ride away. So for those of you who will be in LA, I will do my best to make sure he gets up there for that as well. Happy to have him as a friend and colleague, and I know he's always appreciated in MBHQ. Please welcome Grapedutch to the stage, everyone. Grape, how are you doing today?
Good, man. Good morning. Good morning.
Good morning. Good morning. So first things first, let's start with some background as we usually do. So most of us know some of your background, but for those of us who don't know your background or only know part, can you maybe rip through or walk through a history of businesses or things you kind of attacked before the NFT world started heating up?
For sure. You want like COVID or like pre-COVID even?
Whatever you feel comfortable with. Yeah, you can even go pre, whatever background you think would be good.
Yeah. I mean, I can just start from like the rip. So essentially for me, I was 18 and finished up high school, and I was coming out to Cali to try to do pharmacy, and I was trying to get state residency at first. So I figured I could be a waiter or something of the sort. So I ended up getting a couple waiting table jobs, and while doing that first year, pretty much realized like just how expensive it was in San Diego, and if I wanted to try to do school out here like that, I needed to make more money. And I obviously loved cannabis and like weed. So when I came out here and they had all the legal laws, I quickly opened up like a delivery service while being a waiter and like hiring drivers and starting a nonprofit and all that good stuff. And pretty much scaled that for a couple years until I was able to quit waiting tables. And I like collectibles. I like Pokemon. I like trading cards, all that stuff. So at some point, I started getting kind of deep into trading card stuff. I opened a LLC to do retailing of trading cards. And I pretty much did that in the cannabis stuff up until COVID. And when that happened with the surge of Pokemon, I ended up opening like a Pokemon investing paid group for people that were actually into that stuff. And then all the people that I knew that did Pokemon, like big time expensive flipping graded cards and stuff, a lot of them were into like the online hustle stuff. And all the cannabis laws in California were getting way towards like state regulations and less towards the medical, which is where my companies were in. So I kind of started to scale that down. And when COVID started, there was just such a crazy surge for Pokemon and gym weights and pools and all these weird things. So I ended up just importing a bunch of stuff from China for like shipping weights, and then getting with my LLC that I use for Pokemon, getting in the door with retailers to get like pools and gym weights straight from distributors. And then I started doing that on Amazon, and that kind of went from like 0 to 100. And then as that happened, I got out of the cannabis stuff completely because just the time suck and the cost reward is not worth it. And then I started hearing about NFTs. So I guess just to give like an overview summary of I've always done a bunch of stuff for a couple years at a time, but it's been like a 0 to 100. And then that's pretty much what led up into the NFTs. Like I all in something and try to scale it. And along the way, some of these things didn't work. Like in the cannabis, I did like a bunch of different companies for different products and things, and like some worked, some didn't. And same with the collectibles and the Amazon. Just started ripping through as much as I could of whatever I could, and some things worked great, some things did not work at all. And just tried to kind of pivot, and always tried to do the mentality of go 110%, but like the second something's not working, just cut it and don't be afraid to just like rip to something else.
Yeah, that's pretty cool. And thank you for sharing that background too. And I feel like that flexible approach, right? Knowing that some things are going to fail, you don't know what's necessarily going to fail, but knowing some things are going to fail is going to be. We'll talk about that definitely more today. It's going to be quite valuable, I feel like, on this discussion. So, how did you actually enter the NFT space originally? Like, what got you started? Where did you hear about it originally when it was heating up? Where did that all start?
Yeah, so doing the collectible stuff and then getting sucked into like the underground reseller groups of people that kind of tried to find niches on Amazon and other places where there was just good arbitrage. They all started to get into Top Shot of all things, because a lot of them did. I did sports cards too, and a lot of them did sports cards. So they thought Top Shot was pretty cool. And one of the big perks was you didn't need the physical space. You didn't need to ship the card. You didn't need to wait for the payment to come through. So when Top Shot came out, I pretty much got hooked into that. And then from that, like a kind of a fork of like some weird shit like Wax and Nifty, and just pretty much down the rabbit hole of all the little, smaller NFT things that kind of came along the way with Top Shot.
Yeah. And so, I mean, at that point, you had your card business, I think, before that, right? Like Pokemon cards and sports cards, like you said. What was that experience like? Were you just, you saw NFTs, they were starting to boom. Did you just literally toss that other business aside and say, clearly I need to go 0 to 100 on this? Or was it kind of like more of a measured approach? Did you keep it in the background to see if, traditional cards would still work? Like, how did you think about that?
Yeah. So kind of with everything I do, I'll do 0 to 100 of a project, but whatever my other businesses are, I'll scale them back even up to 90%, but I'll always kind of leave them like the coals hot, just in case something kind of falls through somewhere else. With the NFT thing, it was just kind of like a light bulb for a lot of the people I knew that did sports cards and Pokemon, of, again, the payment processing, the no customer complaints, no scamming, everything was so instant that you could buy a bunch of packs and sell a bunch of packs by the next day. And within 24 hours, you're done. You don't have to deal with customer service. You didn't have to deal with all the just time in between, the shipping. It was just literally a game changer. And just for collectibles in general, it started to kind of spark the complete interest of just wanting to get out of physicals or scale down as fast as I could and just try to do less movement, or at least, less square footage of stuff to hold on to or deal with the liability of.
Yeah. By the way, where do you think we're at with physical card world at this point, right? So at this point, obviously, like NFTs, had their initial boom. We're a little bit in a bear right now, but I think we're all quite confident that as the macro condition improves, right, that'll boom, the next time, more adoption, whatever. Like, where do you think we're at with physical cards at this point? Are they going to have another wave in the future because they're still history? Is the future of cards only going to be digital, where like there's a digital element that exists, and then also there's a physical to marry it? Like, where's your head at with that?
Yeah, that's a good one. I definitely think, with cards, I'm hoping NFTs will kind of be like this too as time like goes on. But with cards, it's always been in waves. Like, they were really popular, then they're not for 5 or 10 years, and they're popular for a few years, then they're not. Same with collectibles, just in general. But pretty much what happens, they boom, and then all the producers make too much and get too greedy, and then there's way too much supply, and then it takes a while to kind of cool off and rotate out of that.
Yeah, interesting. I remember, I'm not going to name the name, but I remember you telling a pretty similar story for one of the card projects that may or may not have had NFTs, a year and a half ago. They still do, of course, but that released a year and a half ago. I remember you saying a story very much like that, where they kind of got a little bit too greedy with supply, and then I guess it's just going to be cyclical from there. So that definitely sounds very similar to what we were talking about before. One of the foundational things I feel like about you to everyone looking is that it may look organic, right? That you just kind of naturally flow through, and it just, you naturally solve exactly how to optimize time and all that. But I know you spend a lot of time on figuring out how to optimize your time and think through time management. So what is your general approach and mentality with time management, given the fact that you only have so much time, right? And things change and all that. How do you approach that?
Yeah, for sure. So for me, the one thing I learned early on, like through school and afterwards, I like to do a lot of things, and I like to do things pretty intense. But in order to like just maintain your normal life, the approach I pretty much do and live by is every day when I get up, I instantly just start getting into all the stuff I have to do, like the absolutes, whatever my LLCs need, shipping, customer service, whatever I need to do by the end of the day, I get it done the second I get up. And then from there, I can, 100% into whatever other bullshit I'm doing that's not necessarily going to pay the bills or keep things going, that just, again, like the base minimum maintain.
Yeah. And so, like, absolutes in your mind, is it quote unquote like sorted by just plain old what's driving the most money to you? Is it that day? Is it in general? Like, how do you kind of sort that list basically of what's like the most absolute, the next most absolute? How do you think about that?
Yeah, so for me, it's going to be like any of my LLC related things or like companies that are ongoing, is like any of the shipping businesses. I run through all of those. If there's any customer service, like anything related to keeping the companies that have been running as best as I can, and make sure I get what, like, at least shipping wise, what needs to be packaged and out. That's pretty much it. For the NFT stuff, it's same stuff you guys kind of do. If I wake up and I don't sleep, if I'm holding anything that's like real questionable and I'm nervous about it, I'll stay up all night to make sure I get out of it. Or, daily I'll check up on prices and floors, but that comes after all, like the non-NFT stuff.
Interesting. So, like, what this theme that's I feel like has existed for you is you've just been really good, in identifying asymmetric opportunities. One of which, I feel like we've all done pretty well. We're all here within the NFT space, right? There was opportunity, it was an inefficient market, all that good stuff. But you've done that for other things as well. So, like, what are some other examples I feel like that you've had in the past several years that you just saw the market and you're like, this is just absolutely insane, drop my shit now and do this kind of opportunities? Any other examples stick out?
Oh, the hands down the craziest one to this day even was the Amazon pool experience and gym weight experience. I had no idea anything about those industries, and I just saw the margins and just knew, I knew just the backup with China, what's happening across other platforms and things I was dealing with. So I literally started maxing out, borrowing money from my friends at 33% interest rates, maxing out all my credit cards, going to get new credit cards, maxing them, like, you name it, I did it. And I spent like $250,000 on pools that no plan, literally 100,000 pounds more than that of gym weights, no plan, no warehouse. They just started showing up on like semi trucks day after day, pallet after pallet, to the point my neighbors and everyone are like, yo, what the fuck is going on? my house, like I filled like a warehouse to the brim, my backyard. I mean, hundreds of above ground pools, to the point I had to contact a local distribution company and like have them come semi truck them to the warehouse and structure some holding shipping contract deal with them, just because it was like it scaled way too crazy and I leveraged way too much. Like again, craziest thing I've ever done by far, like even more than all this stuff. But it just the sorry, just the opportunity at the present was one of those things where any day the pools could start. I mean, they were $600 pools were selling for $5,000 and $6,000 on Amazon because the LLC got approved to sell Intex on Amazon. It was like a crazy aligning of things. But I mean, the time and money and effort spent, and even money leveraged with friends and stuff for the 33% interest with crazy paybacks, it just made sense. It literally made sense to do all these crazy deals and whatever, because every 2 weeks the payout was so nuts. You were tripling, quadrupling everything you put in. So I just knew from that moment, like, put everything else aside and just kind of focus on that stuff. If you know there's like opportunity there.
Do you remember where you heard about the pool concept originally? Like, where did you get the idea that pools were the angle, or that was the arbitrage opportunity that existed?
Yeah, the guys that were grading, flipping, opening packs, selling slots for sports cards, they also did sneakers, and they were sneaker botters, and they totally told me about it, took me under their wing, taught me how to bot, but not for sneakers, but for pools and stuff. Like it was wild. But those guys were even to this day, I still stay in a couple resale groups just to keep my ear to the ground of, they get into tickets for a couple months, like concert tickets. They do some things that just, it's always good to kind of see what they're doing, because these guys are like real hustlers. Like they do NFTs kind of, sort of, some of them got in, some didn't, but these guys have always been just the kind of people that are always, finding out what's going on next. So it's good to stay connected to those kind of groups too.
With the pool example, what did you have to believe in that case to know that it was like, drop all my stuff, take on the 33% debt, right? Like what did you have to believe at that point to know that the opportunity existed? Was it that you knew that there were China supply chain issues, and also there was zero inventory of pools, but there were tons of searches for pools within Amazon? Like, what did you have to believe such that you said, this is an absolute no-brainer, I have to go super heavy on this?
So I ordered like 10 the first weekend. My buddies talked about it. Sure enough, that weekend, all the SKUs started to sell out and the good name brands were doing well. I listed the 10 on Amazon, and literally within 1 hour, they were gone for at the time, it was like 2x the price once they sold out. And I knew that first wave into that first month where that kind of scaled and things were doubling every couple of weeks, I knew I had nothing to lose. And once I started reaching out to vendors and distributors and really putting my ear to the ground of those industries, I found out it was just the start, and it was going to get so much worse over the next 6 months. Almost like a toilet paper shortage, but a pool shortage right in the heat. This was before summer started. So it was just the calm before the storm. China was so busy making hand sanitizer and other products, they straight up said they were rearranging factories and shutting factories down, and pretty much we're not making pools for the whole year, and just to come back next year and place orders for now for the following year if you wanted anything. So at that point, it was just like a game on to acquire inventory.
That's amazing. Yeah. So it sounds like you dipped your toe in a little bit with the 10. You saw how rapid it was going, kind of dug in a little bit more to figure out where people thought demand was going beyond that. It became very, very clear. And then you just said, F it, like proof of concept here. We need to just load up at this point and load the boat, basically. Is that about right?
Yeah, since they were selling literally you listed inventory, it was gone within hours. And due to the botting and the websites I was getting them from, it was Amazon, it was Walmart, they were shipping and delivering in 2 to 3 days. Like USPS, UPS just showing up at your doorstep. So it scaled so much between the first day and 30 days in that all happened, the leveraging, and it all happened within those 30 days. Like every 2 days, 3 days, 5 days, it was just like everything was just getting, it quickly went from 10 to 300 at a time, ordering and botting, and just starting to have show up like semi-truck after semi-truck.
Yeah. Did you wind up having to order tons and tons in advance, or were you able to actually balance it such that you could sell and then take that cash flow to turn it in? Or was the decision at that point, just load up, take on the risk, because I'm extremely, extremely confident these are all going to sell?
A combo. So since they deliver so fast and sell so fast, and Amazon pays you 2 weeks after delivery, the rotation was happening so quick that I was botting them just so they sold out. If they had 50, they had 100, they had 200. The drought started to come. So like I would just take everything I could, and they would just move so quick that it was just like it was just kind of crazy. Like they would show up on your door from a semi truck, and they'd be labels on them and out picked up by another hours later some days, just because you knew they were coming, you were tracking them coming in, and you would pre-sell them. Like there was only so many SKUs, and the websites, even though they got a bunch, they would only list 5 or 10% at a time. Just I'm assuming for their own logistics, their own shipping, like their back end. So it was just the same SKUs. So you could just kind of know a website was going to load more in the next couple of days, run your bots in the background, and just kind of pre-sell some once you had a little backstock. It was unlike anything, even now with NFTs, like because the shipping and the delay and all that stuff, like with NFTs, it's so instant, you'll never really have that kind of like supply and demand issue, which is it's honestly kind of nice. Like, to be honest, like the pool thing I would never want to do again. It was worth it. It helped a lot with like life and just scaling to things, but it was gym weights too. Like I keep forgetting that part. A lot of it was gym weights, not just the pools. And like, man, I was so tired. It was so draining. It was like, and your credit cards and the bot and the emails and orders getting canceled, and just the keeping up with the accounting and stuff was just like on another level. It sucked so much, and shipping everything sucked so much.
Well, by the way, what was your out when you actually went with the pools and the gym weights? Did you know that you could always liquidate them for kind of what you bought them for? Like, were you kind of protected in terms of your downside when you were going down this pathway too?
Yes and no. I was up enough where I figured even if I got stuck with inventory, it made sense. And that's kind of what happened as the scale out happened. Like I ended up throwing away or giving away like 50 pools and a couple 1,000 pounds of gym weights. And like even last month was the last of it. I was still just getting rid of shit, like trying to get ready to move, and just like, my LLC was negative 50 or 100 grand this last year from all the inventory I bought before. And I've just been liquidating for break even or loss, and then the shipping and the costs. Like, I overbought a lot and just has been scaling out the whole time.
Obviously, like COVID is an anomaly, as we all know. Like that was a very, very tremendously unusual time, right? But it's like a pretty telling thing about how quick, what the gap is in opportunities, right? When something's really, really hot and there's kind of asymmetry that exists, and then when that kind of falls off completely and you can't even give away a pool, right? I mean, it's like a very
it's the same with NFTs though. The price will go to 0.003 in days if something happens. Like it's the same concept. Then that's why I'm such a big believer. And when I do stuff, I literally will work 18, 20 hours a day, give it 110% until I know the system's breaking or whatever that loophole is done. Because when the music stops, it stops. And you want to make sure you get enough ahead at the beginning. You can handle if it goes to zero, you're still up, or, scaled out, you're still in profit. Your time was not wasted. You're not negative.
Yeah. I think it's an important thing too, to like almost identify, be it for pools, be it for NFTs, whatever, like what the signal is that the opportunity is kind of drying up, right? And almost have a sense of that in advance so you can front run it, if nothing else. And no two people, I feel like, are going to have the exact same perspective on what that is, right? Everyone's going to have their own opinion, but whatever it is for you, that seems to be like increasingly important to be able to identify that in advance. But so given that you had the pools, great, you had the weights, you've had other businesses and things, obviously there have been some lessons along the way, like you said, some great, some not as great, everything in between. For the projects that you attack now, right, the opportunities that you attack now, like what percent would you say must be immediate profitability versus delayed profitability, where you invest into something and it has a longer time horizon? Like, how do you break that down currently?
So I used to do, when my capital is lower, I used to do a lot more risky, fast things. And as time goes on, I've had the luxury now to be able to do some slower gambles where it's just hobbies almost. Like a lot of the other ones were make or break, and I honestly just got lucky with a couple just ending up okay back to back. But like there's definitely been bankrupts along the way, and like shitty, like a couple tips to sum it up would be, don't get into a business with a lot of partners. I've always had issues with that going on. Don't try, I guess, put everything into a business unless you're really confident, because chances are it's going to fail. Like only go all in on something if it's like I guess that's another thing for me too, not to get too offbeat, is like the things where I've got really lucky, where I all in on, there's not like that many switches over the years, and it was things I was like really confident on, like enough to, I tested the waters for a small amount of time and then gave it my all, and it was worth it enough to like push it to the max, min max it until it didn't work anymore. So like, I guess don't just try to start a passion hobby, or like, just kind of do what you're doing. But if you try something and it works, do not be afraid to go hard then if you are confident. But like, yeah, don't just bank on stuff working. Just realize like you will go bankrupt, or like you will go to zero if you do that. Like, it's risky. But honestly, that's how like you'll break out of the cycle if you really want to try some new stuff.
So with that background, how did you carry that into the NFT market? Like, what was your, maybe not so much now, I guess we'll talk about kind of the cooler market in a little bit, but in like the last year or so, right, as the market, I guess year and change, as the market was kind of hotter and it was moving, what was your mentality then? Was your mentality then around some combination of the two, right? Both flipping things, of course, in some cases, but then also, let's call it the GOGs of the world, where you had a longer time horizon, you knew it would get there, you were comfortable with the fact that there would be some waves, you were kind of okay with that. What was your mentality going in?
Yeah, so at first, pretty much how I did the pool mentality with NFTs when things kind of got, even with Top Shot, I guess, I minted, I started botting Top Shot packs, and like, as many as I could get my hands on. And when it went into NFTs, I did the same mentality. I was a little dirty botter back then, and same thing. I would try to bot or multi-account or, whatever edge I could get from whoever I knew that had an edge, and I would just max mint everything, just like the pools. Like there wasn't enough NFTs being made back then, where as long as everyone was talking about it and it sold out, you were making 1.5x. So it's the same kind of thing. It's however many you could get, you pretty much just got them and sold them, like day traded. But as time went on, and I had some extra capital where like I couldn't buy as many as I wanted, the drops, it was harder to get a bunch of mints. As the edge kind of got more dull over time, then I realized like, and started pivoting into, parking some money into stuff I had a really good feeling with, or it's kind of hard to say that now because there's still some projects now that I feel like, you mentioned Guild of Guardians, like there's still some projects that I am passionate about long term. But I was a lot more bullish then than I am now, if that makes sense too.
Yeah, it makes sense. I mean, I guess, of course, the bright side of this is that like most of that which is going on right now is macroeconomic stuff, right? It's not so much about like the concept not being good or the game, it's just an attention-based thing, right? In a macroeconomic based thing. So that's the good news, I guess. But how has your mentality changed in the past? In the past 6 months, as it has been a cooler market, is your mentality now that it's no by default unless there's something very, very unusually good about a project, or how are you thinking about projects lately?
Yeah, so back then too, I was more just thinking a lot of these projects would be, still around in 2 years and 5 years, and I didn't realize how many projects would come to the space. So back then, anything better than a rug pull, you really thought the team was going to deliver on everything they said, and it sounded so great. And I really do, and I at the time, I mean, still do, but really believed in the technology, and for sellers and holders and collectors at least, it made sense not to hold physicals for the space and liability and all that stuff. But as the time's gone on now, I kind of feel, we all got milked a little bit by a lot of these companies for startups, and our expectations for actual product was kind of low. We just wanted a good pitch. Just pretty much the opportunity to be an investor. So now it's kind of trying to look past that, because any real good deals will get given to VCs. So now it's just kind of, really trying to find products you really think will be here in a couple of years that you would want to use and you think others would use, and it can scale. So it's just made me more bearish, only in the sense of I don't think 60% of projects have a chance to make it like I did back then, because the teams looked great and the pitch was good. Now I realize it's like literally 0.5%, maybe 0.1% that will really make it. It's a lot harder,
Yeah. And I mean, you have a couple of those, right? Like when you and I were talking a couple of days ago, Digi's on your mind, Castaways, I think, is on your mind. Why? Like what makes them so special I'm sure you're not the only one thinking that, certainly about Digi. I don't know about Castaways, right? But like, to you at least, what makes them so special even before you knew that much about them, right? Such that you said, I have to drop my stuff. It is actually worth doing that. I'm doing these other things now. I'm not trading as much as I was before. Why drop your stuff for these two? What was your thought process?
Yeah. So though, and lately I've been kind of not as researchy as I used to be, so I bet I'll miss a couple along the way. But these were just the biggest disruptors I saw that were kind of just out of the norm. I mean, I FUD Gabe almost every day, and I still hold a set, and I'll still FUD him every day. But I still think his past is a disruptor, and him coming to Web3 and trying something, we'll see when he shows it. But I'm at least holding my last set, no matter what the price goes to, just betting, and there is a chance he knows how to do a good loop and to get people to play, and he's going to spend it on marketing. Like, he just kind of knows how to get it to scale, and he might be able to onboard people. And with Castaways, it's kind of, I found them because of, I think, JJ/Gabe and just research, and just hearing about the rafts right after the rafts. And I watched the rafts. I got a raft, sold it at 8 ETH like an idiot, thinking it was, they hadn't produced the island yet. All you could do is fish. But I thought, this is pretty cool. It's like the Minecraft, but their own IP, and kind of like the raft game, but their own IP, easy to sign up. Thought it was cool. But as I sold my raft and watched what happened afterwards, man, those 3 young dev dudes just can deliver. They are delivering. They're putting a bunch of updates out. They built the islands drop. A little buggy, but I mean, they went from 500 users to literally 100,000 users in like 2 weeks. And the game's still playable to a degree. Like, a little buggy, a little laggy right now, but like, yeah, I've spent 40 hours maybe in the last 2 months playing that game, and I never ever thought I would play a browser game like that for more than like an hour, unless I was making money. But yeah, it's just if you haven't tried it, I would say try it, and don't buy an island right now either, because they're gonna do just look into their team, but they're gonna do other generations later, and just wait for the price to be better. But just watch those guys. I think they might even give Gabe a run for his money in the short term, and every other project around, in just terms of like, they're really shipping a game, not just like shitty stake and get another NFT bullcrap. Like, it's like the big time thing, but obviously in a way more scaled down version, but a playable game, and they're shipping weekly updates, not like multi-month, updates. It's just crazy to watch in real time.
Yeah, that's awesome. I mean, it's a good indicator, right, for the space in general. But if you were listening on our last episode, we had Cough Drop on, and Cough, the main focus of the discussion we had was tiers, right? Project tiers, not just for games like we're talking about right now, but for any of the projects that are kind of out there. We're, predominantly talking about the big projects, of course, but like, he kind of tiered them into A tier, B tier, C, I think a D tier as well, if I'm not mistaken. I think he put Digi in either the A or the B tier, and this is with Bored Apes and Azukis and Doodles, et cetera, et cetera. What's your thought about that? Does it belong in a tier like that? Like, what's the path forward for Digi? I don't know if you treat Castaways a little bit differently. What's your reaction to that?
Yeah, so I think Castaways is the underdog that should almost be up there as well. Digi's, I would only say, is up there because people are betting on Gabe's past. Like, so far, everything's been clean enough. The art's okay. The staking contracts are pretty clean. The dev work, everyone is, everyone's giving them nods of like, all right, everything's been good. He's backing up his hype enough that people aren't bitching or calling him out yet. And his past is so good, again, no one's calling him a phony yet. So I do think people, he's been building for a year, and I do think people that know him or his past are just trusting that he's going to continue to just not drop the ball. And I think that's pretty much it. If anyone was to make a Web3 game that for sure on launch would maybe, or not on launch, but for sure in 6 months have 100,000 users playing, he's probably one of the only people that could, have a 50-50 chance of doing it.
Yeah. And in the quieter market too, right? Which is even that much more impressive, I would say, right? So
yeah,
I mean, imagine
No, sorry, you go.
I was gonna say, imagine if it were a bull, right? When the project was really starting to move, it would probably go absolutely nuts.
Yeah, he's a performance marketer, and as much as I don't like it, it's working. And again, if you try to get nitty gritty with the art and the contracts and everything else, like, he's not doing a bad job. So it's for now, he has it by default because his background.
Yeah. So I mean, it sounds like for you, you've had these, several good businesses that you've had, some not as good, of course, and that's kind of evolved to shape exactly what you're doing within Web3, within NFTs, within your own new projects, right? And that's become better and clearer and like a more refined process. But as you and I were talking about, that's not, it hasn't been the most perfect journey along the way. There's always been some problems, some bad projects that kind of came to mind also, right? Are there any examples that jump out to you of projects that just did not go well that you had? And what were the lessons in those cases?
Oh man. Yeah. I mean, one thing to note too is with everything in life, like I summarize things as like categories, but just from the end of the Amazon and it ended up all these things were okay by the end, but like there's many smaller companies along the way or ideas in those areas, the cannabis industry, even NFTs, like Hunger Brains, like there's so many things along the way in those areas that literally fumbled or had to restart or just go to zero before the end result. So with projects too, like starting your own, obviously, like Hunger Brains, it's just you could just have the shit like that where you just everything is a time suck, your mental drain, your energy, you're just everything. And then with other projects, you as the consumer get that same shit just as the other side. I mean, I've had projects like Wizards where I spent 30 ETH on just secondary because I honestly thought the art was clean enough, the storytelling was great. They were just breaking the mold so well, and then they just kind of give up after having one or two fuck ups in the contract, and they're done, gone, and you're no explanation. The consumer's just left holding the bag. So there's been plenty of times like that too with NFTs, like where I've just both sides just like seeing shit can go wrong and just you can be so invested on every level and then all of a sudden it's nothing in a day or two.
Yeah. It seems like from like the project building side of things, not just within the NFT world, but even beyond that, like one of the lessons that sounds like you've had at least a couple times that we were talking about is regarding partners, right? And I guess with Hunger Brains, like that example, it was more on the dev side of things. But even outside of that, right, for some of your pre-Web3 projects, there have been a couple instances where you learn something regarding partners, right? And like choosing partners wisely or when to have partners. Like what kind of lessons have you learned there that you think would be useful for anybody who's maybe considering creating a project within Web3, doing their own side hustle? Like what lessons have you learned there?
For sure. Yeah. Uh, for me, at least, the partner thing nowadays is only when it's a hobby or a passion or something where you don't rely on the money, and it's okay if someone isn't on the same energy level as you. It's a slower grind. It's not super important. Like it's something you can work on over time with, or it's a fixed business model where as an investor or whatever what you're getting in and what you're getting out. A lot of time with partners, when you do the all-in 0 to 100 with new areas, new categories, it's really hard to match up energy-wise with your partner. Like one day they might be doing 100% at 180, and if you're the kind of person that's always doing 100% or whatever, it just gets so rough, and it just is like or even stealing or just whatever. There could be so many just nukes with partners where you could be so invested and all of a sudden it just blows up. So
Yeah,
I
how do
wouldn't
you
give
manage that?
110% with partners like that because I've been fucked in the past where it's like it's not worth it on the 0 to 100 things, like your full consuming stuff.
So what I mean is the lesson from that: don't have partners, especially if you're kind of the everyday turbo mode person. Is it only pick a partner that you know can go at that turbo mode? Is it hire a team and have different incentive structures and comp models in place so that you don't run into that specific issue and you just make sure that your team has the right kind of performance structure in place? Like what do you think is what's the main lesson from that?
I guess if you have to have a partner or you're like insisting on it, make sure the expectations are like on paper early on of what each person's going to be doing, or try to make sure you even if you're friends or whatever, you get everything way out of the way early on. Because even if you don't think it's an issue, just when things come up, when it's a company or your baby or something you're trying to scale and you don't see eye to eye, it ends up being big roadblocks and just a time suck away from scaling the business or whatever. If it's one of these 0 to 100 things, all that slowdown might be the difference of like the exponential growth you needed, especially when some of these things can go to zero fast too, depending on it, like industry it is.
Yeah. Yeah. I mean, building on top of what you're saying, like couple ways, I guess, to be able to manage that to some extent is like one, maybe having guiding principles in place first, right? So if you decide to partner with a friend or somebody else, right, having a clear discussion that, we may be friends outside and that's great, but this is business first, right? Which may cause conflict problems, whatever else it is. And then two, I guess like you're saying also, having explicit contracts, explicit terms, very explicit expectations, so that none of that kind of previous friendship or whatever, I guess, gets in the way. It could be an asset, obviously, in a lot of cases, that you have a good rapport, but it could also get in the way, right? In many cases where you have a good relationship and therefore you don't feel comfortable being direct or saying something because you're worried about that. It could just get really messy really fast, unfortunately.
Yeah, I mean, it depends on the kind of businesses you're doing, but at least for what we do, or a lot of things I'm involved in, you don't need two people. It's mainly the time suck. Anything that slows you down, and then these short-term, short-lived, potentially, even if it's 1 year short-lived, whatever. Having a partner always slows down everything. Double checking with someone slows down everything. Especially if like time's an issue.
I think also building on top of what you're saying too, like no matter what the structure is, like at the end of the day, you need somebody to be the decision maker, right? So if you have two people who are at parity and it's 50-50, let's say, like still somebody has to be the decision maker, whether you like it or not, right? So having some kind of structure where there is, I hate to say hierarchy because we always talk about decentralization, right? But some path to governance and decision making, right, is like pretty crucial. With even partners, that kind of goes out the window too. So with the NFT space currently, Grape, putting aside the macroeconomic stuff that's going on, right? What is the space missing currently? Like what's holding us back? Again, putting aside the macroeconomic, what's holding us back from going to mega adoption at this point? And you can, pull from your card background and experience, because I'm sure you saw growth there on that side of things. What do you think the limitations are currently really holding us back from mega adoption?
Yeah, so I mean, my form of mega adoption, like what I think is realistic, I do think there'll be, millions and millions in the next couple of years, wallet users and people that want to get into it and holding and, that get into the backside or like the deep end of it. But I think the real mass adoption is going to be gaming or something where you can get, and it almost like the Castaway style where you don't need an account at first, you don't even know you're playing, or even the Guild of Guardians, some kind of mobile game. Until you link up your wallet or like ask to get the seed phrase and stuff, you don't even know you're using a wallet. Like gasless transactions. I think that's going to be the real adoption. So until some of these games start to come out that have a chance, or until a big title decides that they're going to try some free to play, potential to get some rare items that are quote unquote collectibles you can, take off somewhere else or sell on their marketplace for real money. Until that happens, I don't think we're going to have like the million users doing one project kind of adoption, unless Ticketmaster or someone switches everything to NFTs but yeah, I do think pretty much right now we just need someone that can scale to do something that's usable with zero friction. You're not going to get a million users on anything right now with making a wallet, writing down a seed phrase. Like what we're doing right now is not going to get mass adoption.
Yeah. I mean, that changed onboard is really crucial, right? Of not having the wallet gating up front and enabling people to just play, earn, and only then when they want to unlock the rewards, have some kind of wallet element that exists. What's your thought, though, about, the balance between custodial and KYC versus non at that point? Is that going to be a barrier also? So let's just say you remove the wallet gating up front. We all know that normies are not going to be, not necessarily going to want to have non-custodial wallet because they're too worried about risk or something goes wrong or if they get hacked or whatever else. But on the other side of it, obviously, we have the Web3 folks who tend to not want something that's custodial. So how does that pan out? Is it just two wallets in the background where it suits both of the needs of the two parties? Like, how do you think that goes?
I mean, I think they're doing it now. Like Reddit and some other places are a good example. You don't even have to do anything with it. And it's if you just trust the website and you don't want to get a wallet, you can just log in with your email address, your cell phone number, and a password, and it's right there in your account. If you don't want that and you don't trust it, you can export it if you want. And from there, I think it's can still connect and you can still prove you have it in your other wallet, but you can put it where you want. Just the least amount of confusion for anybody. And if someone wants to go down the rabbit hole, there's totally options to do that.
What do you think would happen if regulation comes in, which we all know is going to happen in some way or another, right? And all of a sudden, custodial or some version of custodial kind of became the norm at that point, right? They're saying, look, you're going to have to, if you eventually want to sell, you're going to have to off ramp into a centralized exchange or something. Hence, KYC and custodial is just a logical solution that exists. Like, what happens then? How does the Web3 world react to that? Do they just totally object and won't play games like that all of a sudden? Like, how do you think that'll go?
So my take might not be the most popular. I am like a total I play fair by the books. Like I have no problem doing that and paying 50% taxes if that means I can use it as income and get a home and a loan, and like I'm all for that if that's what it takes. Otherwise, you can't. None of us can do. That's a good thing to know. A little off topic too. Like no one realizes. Like even with my companies, because this last year I was just due to selling off stuff, trying to move. I was a little negative. I couldn't even get a home loan, even with making like $1 million in crypto. They won't take it. So like even if you think you want to do Web3 and live in this space and whatever, you won't currently without regulation and KYCing and doing these things, you're not going to be able to do anything with it. At least you're in America. You're not going to be able to buy a home. You're not going to be able to like, it's useless almost.
Yeah, I'd love to hear from the crowd. I just dropped the question in just to get a straw poll for everyone. It's in office hours chat for those listening live. Just on what the reaction is to that, like custodial, but normies and larger audience. So that might mean you have to use a Coinbase or whatever else, but bigger audience, therefore more demand, that side of things, versus non-custodial but smaller audience. And I understand that those are not perfectly mutually exclusive, right? Like you could possibly have some overlap there. But I'd love to just get a couple reactions on there to hear what everyone wants. I'm very, very curious to hear what the thoughts, because there's obviously a pro to both sides of it. And I know everyone has all kinds of different opinions there. So I guess as we get those kind of responses and get those kind of floating in. So what else are you excited about, Great, moving forward within the NFT space? And for the time being, are you parked on the traditional card and collectible space and your head's almost all within the NFT space, notwithstanding the markets right now?
Yeah, I mean, yeah, right now, honestly, I'm just dialing down everything as much as I can, just kind of just sitting on the sidelines. Even with collectibles, it's just all markets, like everything's down so bad right now that it's not even time and effort is not worth it. Like as much as it's nice to go 100% on stuff, in these kind of markets, it's also you got to like know when to do nothing, or know when to just relax to even out when you're doing a lot the rest of the year.
Yeah. That makes total sense. So just in the background, if anybody has any questions in the live audience, now's a good time to drop them into guest questions. Grape's super thorough and open, so very, very likely that people may not have questions, to be honest with you, because he's really, really always shares with us. But if anybody has questions, now is an excellent time to drop them in. But as we're waiting, I do see some responses in here. And I see split initial responses is what I'm starting to see. Some who want custodial and some who want non-custodial. With I'm seeing a couple different responses. But if anybody has any additional thoughts, like continue to drop them in along the way. I'm very, very curious to hear the debate on this one. Or if somebody has another option or another approach, drop that in too. If they think it's going to merge, if they think it's going to be able to suit both audiences, if there's a path forward there. All I know is, and all I remember is, other side coming in and some material chunk of people not wanting to go through KYC, right? Whether that means that they ask their friends and family or wherever else, a separate question, right? But all I know is that was a thing, and moving forward, more regulation like could become a thing. So I'm just curious to hear about that.
Well, I have one question for you though on that.
Yeah.
Just open-ended to anybody, I guess. I mean, depending where you live, whatever your taxes are, if you own a normal business, why shouldn't anyone pay taxes on crypto? I'm not saying it should be 50% or whatever, but or whatever the rates are going to be or whatever they are, but why shouldn't you pay the same rates you would pay on a normal company?
I get the sense that the tax debate has less to do with crypto specifically, as much as like the general concept of people paying 50% of their paycheck for taxes and being annoyed by that. I don't feel like.
Well,
yeah, go ahead.
I guess, and then the other part, if it's about being anonymous, I mean, I guess maybe they'll make a way. You could probably fund your wallet anonymous, and just I don't know. If it's just tough, like if you're gonna make money anonymously, you still got to pay taxes anonymously. Maybe the wallet can do it without KYC, or I'm not really sure a way to get around that, but there's got to be some way to avoid it.
Yeah, I mean, I think look, it's just like this general frustration that exists, right? That's all that's going on. People are annoyed with government in the U.S. in general these days, especially younger folks, increasingly so. And now we're here all of a sudden, right? So, I mean, I guess there's options, right? There's Puerto Rico and there's Portugal and all those good options too, in case anybody doesn't like that. But I guess while you're here, I mean, I guess you can choose yourself which path you want to take at the end of the day. But I don't personally disagree with you, but I can understand why people are also annoyed by it. Scott was just asking in the back. Oh, go ahead, Greg. Yeah, go for it.
I say, but this is coming from like small business owner side. That that side of me feels like that, because then my normal companies get slammed on taxes after doing so much physical work and warehouse and storage and so much more risk, that it's like, yeah, anyone doing this stuff, especially with the gains and how risky it is, it's almost like gambling. But yeah, you should, taxes and stuff should be fine. And I was pretty much responding to Ryan by saying that.
Yeah, that makes total sense. Scott Co, we have a couple questions coming in. Scott Co's asking, do you think the experience for a new trader getting into NFTs is better or worse now than it was in 2021? Yeah, what is your thought about that? I'll give my thought afterwards, but you go ahead.
So it's harder, but I definitely think if they, if there's a good project that they do some research on and then grind a whitelist, there's definitely still chances to make money, almost guaranteed on stuff. It's just a lot slower. You can't just throw something against the wall and a lot of it stick like it used to be. Now it's like, you got to be more careful, but there's definitely still free money here. Like a lot of free money if you just pay attention and again, like do the grind.
Yeah, I agree with that. I think also we want people with substantial money and not many people with not as much money. I mean, ideally we have many people and some chunk of them have a lot of money, right? Because they still have to buy whole assets at the end of the day, even though some of them could be fractionalized. So I agree with Grape there. I think also from a user experience standpoint, I don't think the user experience has gotten that much better from 2021 to right now. It's not like onboard for normies is exactly excellent right now. Like it's integrated, into Instagram and Reddit, right? So things like that, of course, help, but it's not like it's the most tremendously easy experience. It's still very fragmented too, right? Across those platforms, across direct minting site. It's just still a very, very fragmented process. So I don't feel like it's the most intuitive for somebody that's coming in new, let alone the most profitable for them to hustle for. Proportion is also asking, Grape, you experienced mental breakdown during those trading moments, and how did you deal with it? I assume referring to, more difficult trading moments or ones where it didn't pan as you expected is what they're referring to.
So after the pool thing, I kind of just like it was so crazy that I just kind of got used to the big swings. And same with Top Shot after the watching your profile go value so high and then woo all the way back down round trip. No, like it's even when like Wizards and things rugged, or even the Hunger Bringer, I was down hundreds of thousands of dollars. No, I guess you just laugh about it at this point.
Yeah,
it's more the lack of sleep some nights trading that gets stressful, like days on end sometimes, like when things are bull market, lack of sleep and just stuff like that just gets to me more than anything. But other than that, no mental breakdown. It's just like just financial breakdown.
Is that just coming from the fact that you've got a really good gauge of risk going into anything right now? So you're just very pragmatic about the fact that there's an outcome that's not unlikely, that just kind of is going to be a bad outcome, and you're comfortable with that at the end of the day. You're comfortable with you're releasing a project and that it's possible a series of things could go wrong and you may lose a couple $100,000 as a result of it. And that's just a risk that you're willing to take. Is that where it comes from?
Yeah, I think it's mainly because I still continue to keep other companies and things going. So I know if anything falls back, I can put my energy elsewhere, and it's not the end of the world if something just went to zero again in an area. Like with NFTs, I also try to put enough like money aside for taxes and just side money so I don't stress. But anything I invest is like, I literally know it could go to zero in 2 days, and that's just the name of the game. Like company get hacked, they could release it's just so many things could happen nowadays for like, yeah. It's gambling. You should know when you put your money in it, it could go to zero. It could 5 or 10x too.
Yeah. I think there's a point relating to that too that I think I caught yesterday that our friend Shaggy called out within VC1 about kind of like very, very tightly trading things and trying to catch every little edge. So for instance, we come out of the Fed meeting, I think it was yesterday, and the market starts to tick up, and then obviously it dials down afterwards because the news was not the greatest. And everyone's trying to catch every little blip that exists, right? Which is great. I get it, we're traders, but like also the standard that you're going to catch every little direction perfectly is like a really, really tough standard to lay for yourself too. And sometimes it's tough to be able to get that right, and other people have informational advantages or whatever else. So not being so hard on yourself and doing your best to make good decisions, not having them be too micro where it's going to be really, really hard to win constantly, or at least playing a game you're comfortable with. I feel like that helps a lot also. I think Scott Go maybe has a follow-up question. I want to make sure before we break that we're able to catch Scott Go's question, but I guess there's nothing coming in. So with that said, I mean, I think it's a perfect time to be able to wrap up here. It was a really cool discussion and episode, Grape. It's a little bit different than like the normal conversations we had and that we have on here. But I feel like it just has really good analog to a lot of the things that we're doing as traders, as investors, as project developers. You've just had a lot of good experiences that I hope were really helpful for the crowd that were listening live and then listening later as well. So really appreciate you coming on, man. And even more than that, really appreciate you kind of being open about the fact that it hasn't all been glorious and wins constantly, but some of them have been frustrations and that side of things. So I really, really appreciate you coming on today. For everyone listening live, appreciate you like always, for all of your thoughts and comments, and very much appreciate, the filling out the survey and giving feedback on Numbers Therapy too. Really appreciate that too. We will see you all same time next week or similar time next week. And Poop is also around in the background, and I think we'll be raffling off the allow lists for the survey respondents too. So thank you so much, everyone. Keep a lookout for the raffle giveaways that Poop is doing right now, and we'll see you similar time next week. Thanks, everyone.